Good morning, everyone, and welcome to the PivotBoss pre-market video for Wednesday, May 6th, 2020. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. Again, I'll continue to mention here, since the March lows, we continue to see a very steady uptrending market so far. Higher highs, higher lows. We have since pulled back to begin the month of May here, and we've pulled back right into the monthly pivot range, which is a higher value relationship. And typically speaking, that's an opportunity to buy for a shot at retesting highs and likely pushing through those highs. I did mention to keep an eye on the previous month's close here because any rejection there could lead to some weakness. And even if we rejected at the highs here, that could lead to maybe a break down below. Down through 2700, a break of that level would open up much more weakness here. But at this moment, this market has been very resilient. Every pullback has been a buying opportunity, and even pullbacks have been very, very minimal. 1 day or 2 day pullbacks, most of it just being sideways before it pushes higher. So again, keep an eye on these blue dots here. That's the previous month's close price. That's 28.82 half, and above that zone could squeeze pretty big here soon. It could be a 1 day deal. If it fails to get above that zone, if there's a rejection or a lower high, perhaps we're headed back to the midpoint of the previous month's range, which would be 2700. So keep an eye on the previous month's close price there. All right, let's take a look now at the NQ. There's the NQ, which you'll see here is very similar price action, but this one is sitting above the key level there of the previous month's close. This key level right there. You can see an entire day right now, or entire pre-market, trading above that level here. It closed beyond it yesterday. This is the other level that's very important that I called out yesterday, which was 89.60 half. I mentioned 89.60 half was going to be very, very important. It is the FOMC key level from April 29th here, and after going initially offered here, if price were to take it bid, it would push to new highs well beyond that 9,000 level. 9,000 here was offered yesterday, came back to it here today, and is right there trading just below it in a box between 89.60 and 9K. So basically this range here that we've developed overnight, very important. The overall trend remains up. It wouldn't surprise me if we saw some sort of failed low followed by an upside break. But again, keep an eye on 9K here and the previous month's close price. All right, let's take a look now at crude oil here. Again, I'm looking at July crude oil. Right now, July contract has more volume today at this point here than the June contract. If we take a look here, we're having quite the pullback day. I mentioned yesterday, keep an eye on prices above 25s here for a shot at rejection, and we did not see that. Instead, we saw price explode through that zone and end the day quite higher. Today, just before the pre-market open here, we're seeing a very significant decline since about 6:20 in the morning Central Time. That decline took price from 27.16, which is the previous session's close, and went straight offered very, very hard. We're now seeing price hold right around 25. So that's a hard pullback here from these highs. And again, if there's a failure to stay above 26 for long, we could be looking at another rotation back toward recent lows. So right now, this is going to be very interesting to see how it continues onward. But at the moment, seeing quite the rejection here from the 2720s. All right, let's take a look here at gold futures. Now, gold futures has been very, very quiet. It has traded in a range here over the last week plus, 2 weeks, 1, 2, 3, 4, 5 days here. Has price trading at about 77% of ADR, but it's been compressed overall. If we were to do, say, a 10 handle range and bring this up to 10 right there, the PivotBoss Advanced ADR indicator here on 10 is going to quantify this range here. And again, very narrow still compared to average, but not quite 75% because it's been super compressed. So this market right now is compressed, but not compared to its average here. And you can see this apex right here, all trading around the FOMC key level from April 29th. That's the 1716.40 level. Above that level, we'll squeeze back toward recent highs between 1760 and 1770. A failure to hold this or get back above 1720 again has 1660 as a key support zone there. It's been inside that range, and it's likely to stay inside that range for a while, at least until this thing can find enough juice to get a breakout and expansion from that range. And you can see right here, again, price trading within that 1760 to 1660 zone, and likely to stay in that range with an upward bias until proven otherwise. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room.